Hello, everyone, and welcome to Saturday's edition of LowPro and CRInvestor's Trade the Plan show. It's Saturday, May 3rd, 2014. This is CRInvestor Brian Beamish coming to you. Let's see whether we have the screen share up and running here. I've been working away on intro music, so I don't know how that went, but I gave it a go creating some intro music, and we'll see how that looks. Looks like the show's up and running. I don't hear the music. So the music didn't play. Anyway, it's an ongoing adventure with this YouTube, and you never know how it's going to work. Anyway, for those people that are interested, I tried using the Google Hangouts Soundation app, and I wrote a cute little ditty, but I guess it didn't work. So I'll keep working away on that. These are a work in progress, so take it for what it's worth. Management's trying hard here for you. Where are we? Today is Saturday, May 3rd, 2014. Happy May. I suppose Mother's Day is coming up pretty soon. Should give Mom a call shortly on that. It's now 5 o'clock Pacific time. This is the time we usually do the Trade the Plan show. Looks like Landon might be a no-show tonight. I suppose as the summer wears on, we'll probably have that happen with our co-hosts. I do hear that messages are coming in on the chat for me, so let's see what I got here. Oh, somebody's asking for the YouTube address, so as we go through this process of starting the show up, I'll probably be popping in and out to give people addresses, so let's see if we can find the YouTube address for them. It's around here somewhere. There it is. Copy. What's interesting is I tell people to PM me, but they don't seem to want to do that. So we may just have to go into the chat here and let's see. How would we do this? I wonder. Here's somebody. We can do that, and then go message, and then we'll go paste, and hopefully that worked. Usually, just for anybody who's watching, usually I concede that it takes some time for these shows to build up to speed and get everything ready to go on time. So I usually actually allot a first half hour or so just to for people to get settled in and join the lounge and stuff. And it's interesting today because I am flying solo at the moment in the Google Hangout, so if I disconnect, the show may actually end rather abruptly tonight, but that seems to be the way it's going here with the Google Hangouts and these shows of late. I try my best to give you guys a good experience, so that's all I can do is try my best. So let's see what we got here. The YouTube link is on the Twitter feed. I see that. And why don't we add a tweet in here? We'll say, wanna join the forum? Here's the Google Hangout link. And then we'll go grab this, and we'll put that into there. Do I have enough space? All right, and we'll tweet that away. So let's see what happened here. Zip, 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 zip. Alright, so those are both in there now. Let's see what the mood is. Oh, so Fibber wants to come and play, so always fun to have Fibber in the house. Fibber. Let's see what he has to say today. Boom. All right. Looks like, oh, I have a link, Brian, for YouTube. There's another person who wants a YouTube link. That's this one. Okay, where are we? I'm on the wrong page. I gotta go back over here now. Boom. Something along those lines. Well, let's get this guy to come in here. And we'll have fun today about talking about trading plans. Anybody else? Link, please. That was 7 minutes ago. Well, we'll throw them in there too. What the heck? Boom. And it's interesting that TradingView, it doesn't make a sound when posts are. What should I have? Sound on addressed messages to me. Whoops. Didn't mean to do that. Well, hopefully that'll work. And I sent 2 hours ago. Oh yeah, I sent in that. 8 minutes. Could you please send me YouTube for Hangout chairs? All right. What's YouTube? YouTube's this one. Copy. So bear with me here while we get the sort of show on the road. Whoops, here comes another message. What did this person say? Link, thanks for the show. Well, I'll have them in here. Boom. All right, well, that's quite a few people. And anybody who's watching on the YouTube page, feel free to pop in the Google Hangout if you want to hear your voice heard over the airways. We actually get quite a few viewers of these shows, so you have to get rid of these things. Boom, 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 boom. Plus. There's the Google Plus address, if you are interested. All right, so that's all up and running. Oh, hello. Who do we have here? We have Ramon has joined us in the lounge. Hello, Ramon. If you want to say hi, feel free to say hello to the world. All right. Oops, did I get this one? Yep. Okay. Well, Ramon's going to sit in the background. All right. Well, I might as well get going here then. Welcome to the show, as always. My name is Brian Beamish, better known as CRInvestor, or the Canadian Rational Investor. This is my website, Canadian Rational Investor, therationalinvestor.ca. And we're actually, you're going to get a sneak peek at my new site here that we're just in development, and it's going to be therationalinvestor.co, so that's kind of cool. And it's going to look like it was programmed this century rather than last century, so we're really excited about that. As well, we have a group of us over at TradingView, and it's been a real fun community to work with. I use these TradingView charts a lot because they're pretty nifty for technicians. We're working on a really interesting social media site for Bitcoin, which is going to be pretty robust with a whole bunch of contributors. So that's something to look forward to. It's still sort of in the planning stages. But lots of exciting things going on here if we can survive over the next few months. Of course, quite a few of these shows and the show audience are directed towards the Bitcoin audience, and we all know the wonderful bear market that's been going on there for the past little while. We can talk a little bit about that. It's interesting because today's show is supposed to be about trading plans and psychology and stuff like that, and we actually do have a setup working on Bitcoin. So we can get to that in a little bit. It was encouraged, and I guess it's a good idea to thank all those viewing ahead of time and appreciate you stopping by, and I hope you enjoyed the experience either on YouTube or in the Google Hangout. If you've learned anything, if you appreciate the hard work that's put into to bring this to you, then you're more than welcome to come to the rationalinvestor.ca. You can make a donation. You can see 32 other people have made donations, so really appreciate it. Donations can be as small as a couple bucks in Bitcoin terms. You can see, well, I suppose we don't need to get into that, but you can see others. Typical donation seems to be about $4 or $5, which, hey, I appreciate. I think it's totally awesome. And I only mention it because people are like, hey, you should mention it. So there you go. Let's just do a quick review. So as we said, the show tonight is basically about the trading plan, working on trading plan, understanding psychology of trading plan, understanding psychology while being in a trade, and dealing with the kind of hurdles that traders on a daily basis deal with. And I'll talk to you about trades that I've done, combine-wise with my proprietary trading firm out of Chicago that I work with, or Bitcoin-wise, and basically how they fit to the plan, as well as some of the other models that I run. So lots of fun. We got lots of stuff to talk about. I think it should be a good learning experience. I do like to take the first sort of half hour, like I said, and slide into these presentations. Like right now, it's 1:15, and you saw me messing around with sending links to people and all that kind of fun stuff. I wouldn't be surprised, and it's typically how these things go. People sort of saddle in over time. And by the time the end of the show theoretically rolls around, we got a full house. But anyway, that's the way it goes. Personal experiences, like I said, might talk maybe about a crude oil trade that I did here to set up this past week and how it made me feel. I'm going to do probably a little just short presentation on my material from my courses and what trading plans look like. If LowPro does show up tonight, I'm more than happy to leave the window open for him to do a nice little segment on his trading psychology. I always like to hear other traders' input. So we'll keep our fingers crossed, and hopefully he'll turn up tonight. And then at that point, depending on how we're going, I'll open up the panel to questions and answers, and usually I pull a couple down from the YouTube, and as well anybody who's in the lounge right now, you're more than welcome to post questions. Yeah, and Ramon's here just mentioning the fact that YouTube has a bit of a delay. That's true. I think that's sort of like so that they can, watch copyright stuff, kind of things like that. There's a whole bunch of algorithms the shows go through. So I think that's why there's the delay. So that sort of is the summary of what we'll be doing tonight. Like I said, question and answer to end it up. If we might end a bit early tonight, you never know. But usually I get a sort of a feeling when the show has sort of run its course and it's time to wind things up. So my hunch is if Landon doesn't show up, we'll probably end maybe about a half hour early or so. All right, so personal experiences this past week with trading psychology. I really haven't been trading very well on my day trading account of late, so I did do a trade on Friday, and I was pleased with it, and I posted the trade setup on my TradingView feed. And if you subscribe to my my Twitter feed and things like that, then you get notices that these things are being produced. But I personally like to follow this very mechanical trade setup called the bot, and I just give it that name because it hey, there's Andre. Hello, Andre.
Hey, Brian.
How are you?
Yeah, I'm good, thanks.
Good. Thank you for stopping by.
That's
Everybody
brilliant.
who's listening, this is Andre, also known as Flibber, very good trader, and probably not the type of trader I would like as a client if I was his broker, because he takes a hell of a lot of risk, but he can manage, and he can I mean, some of the war stories that he's told me about trading, I mean, he's basically got ice in his blood. So I'm always in awe of his trading prowess. So thank you very much for stopping in tonight, Andre.
Well, thanks for the compliment, Brian. But we called it spot on the last show, didn't we? We said 439, 436, spot on, didn't we?
Yeah, well, that was, and for those out on YouTube watching this show, Flibber and I do a cryptocurrency show every Wednesday. And it just goes to show there's obviously value in watching the show, because, man, that was one hell of a call we did. And it was really cool, was that it was all based on, pretty reasonable technical analysis. It wasn't like we were just pulling crap out of our butt. So yeah, that was really good. And if anything, I'd almost, one of our, I was mentioning to the YouTube audience, one of our compadres in this idea that we have as a video guru, and and I'm hoping that maybe he can just, find 3 or 4 minutes where we did that really good analysis and came up with a target, and then just press fast forward, and boom, it just nailed it.
That's it. We can do that with all the good ones and just ignore all the bad ones.
Well, then what are you talking about? They're all good. Anyway, it's interesting, because of this OTE tag, and because of the the head and shoulders target tag, and we did get a bit of a volume panic here. I'm not quite sure what the story was around that big dump. But I actually could justify. This was a double bottom that came in here, and I actually, from a risk reward perspective, I could justify taking that if you're, so inclined. And the trade's just slowly working away. It's fascinating to watch.
Well, it's funny you say that, Brian, because at 435, 434, nobody wanted to buy, and I mean nobody. Volume was no, it was just sitting there, and in the chat, people were going, "It's over, it's over," and I said, and the one guy was saying, I'm just going to sit on the sidelines. I'm just not getting involved in this. And I said, well, you know what? I'm going along here. And they're like, why? Why? Where's it going? I said, it could go to 455, And it was like, no, no, no. I said, well, you know what? It's an OTE, and I'm just going to take it, and if it can't hold 432, I'll let it go. And it just about clung in there by its fingernails, and we're off now. So, who knows? It might come back down, but, who knows?
Well, so kudos to you. And this is half of the battle of being trader, and it's probably a very good subject matter for today's trading plan kind of show. Hi, Brian. How are you?
Oh, I'm barely keeping awake.
Well, thanks so much for stopping by.
Yeah.
Please don't make it a hassle or anything.
But I must make money. I spent so much today.
Okay. Well, Andre, it's funny because I think you were in our show on Wednesday, and Flibber and I were just commenting how we painted this target here in the 435 area, pretty well, and frankly, that's pretty, like you can see my screen, pretty good. And what I find fascinating is the little double bottoms come in here right at that OTE long sweet spot level. So now you can see my chart, and what's really interesting too is how, and Andre was talking about this, how the sentiment at around 435 was just, very, not only bearish, but complete lack of interest bearish, which in a weird sort of way sets up, like if the street feels like Well, let me say that. If the market feels like the street is heavy, the market will actually go the other direction, and so that's kind of what I think's happened here. Here's, this is, we're getting sort of off topic, but, I'm a huge fan of 38.2, and so you see the rally off the double bottom just smacked right into that 38.2, just bang. We've rejected off of it, and it's interesting how we came back down and tested that original double bottom, and you can see on my chart that notation from that long level. And, I suppose you could argue that, if I was an institution and I was going to short, where would I short from? That's the red box, that OTE short sweet spot up top there. That's sort of, I guess, what I'm projecting off of this setup. Full disclosure, I've told everybody here, I simply don't have the amount of coins to deal with to justify taking a trade like this, but to me, that's a perfectly realistic setup.
Well,
Not quite sure why my screen share kicked out there.
If you can go to my screen share, Brian, I'll just tell you exactly what happened today, because this was really interesting. I was watching it on the 5 minutes.
Wait, your screen share was there, and then all of a sudden it dropped.
Let's have a look. Is that working now?
Usually it takes a second or so to kick in. But anyway, it dropped my screen share, and then I saw it did the same thing to you. So, maybe the system's a little temperamental tonight.
See, it seems to be working on, it seems to look, if you click off me and click back on, does it come on? Yeah?
Yep, there you go. Oh, isn't that weird? What's going on, man?
It's definitely working, definitely looks to be working for me.
Okay, I've got it on now. I apologize.
Okay, so yeah, what happened was, this is just a 5 minute, and there was this bullish divergence going on the RSI, but also I was more interested in this MACD because it was just telling me that this is just not. We'd hit this level. I think it was 436 was the OTE, which is there, and that was what it was on Stamp, I think, anyway. But the level to hold was 432, which was there. So you can see it just about clung in there. But it was an OTE. I was playing the OTE. We had bullish RSI. MACD was saying, there's some bullish momentum building here, and then what happened? It popped.
Yeah, can't argue that.
And it popped, and I said to Dan V, I said, oh, I'm expecting a little bounce here, and he said, oh, why? And I said, well, I just said, I think, nobody likes to sell and make a new low. Nobody likes selling and making a new low. It's horrible. And I said the sellers just seem to have dried up, and just think it's going to pop. And he's like, why? And I said, well, it could just make another bear flag. Even if it's just that we have, even if it just comes down, just as another one.
Yeah, it was. I think especially what jumps out to me is the cute little double bottom there on the MACD, coupled with the little double bottom there on the RSI. So I think what my take on that is the sellers are just exhausted.
Yeah.
So that doesn't necessarily mean we're heading to new highs. And I suppose if you draw one of your battle lines, to me those lows, and I don't know what exactly that is. There's double bottom lows there, and they seem to correspond well with those recent highs. That to me looks like a significant battle zone. And keep in mind, you remember you were looking at my chart, and that's this 38.2. So it's fascinating how the fibs, like I'm obsessed with 38.2. You hear me talk about that. The fibs line up with this high and these lows, right? Yeah. So that's obviously a serious sort of, like if you're going to say, we're going to draw a line in the sand, bulls versus bears. Right now, I think as long as we're underneath that line, the bears are still in control. Get back above that line, and yeah, I think you rally right up into your cloud there.
Yeah, and I think if you look at that as a top, with these kind of candles going on here, yeah, that looks like the line to cross to go bullish, and this looks like this is not looking good at all. But this, I mean, it's funny, isn't it, that it just the level it come down and rested on was just right on the bottom of that candle, and you're just using the tops of candles, as horizontal. I mean, if you don't even have to use trend lines, you can just put in some horizontal lines on the top of candles, and you're pretty much setting great resistance levels. I mean, you can see there just off what I've drawn that 454. That's obviously going to be a major point. Obviously, the top 463 is a major point, and this bottom here, and obviously this kind of super bottom here. So this is a kind of the range that it's in now.
Yeah, well, and just draw a horizontal line off of that recent high there, and that's a significant level too.
Let's put it at that one.
Yeah, right in there, somewhere in that neighborhood.
Yeah. I mean, we've actually got
and there
bounce.
you can basically dissect the market.
Yeah, just using candle tops and horizontal lines.
Yeah, it's called horizontal support and resistance.
It works great, because somebody said to me once, they said, "How are you picking all these levels?" I said, "I just get candle tops with a lot of action on."
Yeah.
That's a level. Simple as that.
All right. So thank you very much for that, Andre. We'll check back in with you in a few minutes. Just sort of staying on topic here today, guys. I would like to, make sure that anybody who is, tuning in to hear me talk about trading plans and those kind of things, they at least get a little bit of a presentation. So what I think we're going to do here, I'm going to take sort of the next half an hour and just do a bit of a presentation on what a typical trading plan ought to look like, how it's not that difficult, and I'll give you examples. In fact, all the models that I'm running on this website that we're building out all have trading plans, and we'll just walk through them just to illustrate, what a typical trading plan looks like. Because a lot of people, when they, someone asks you, what's your trading plan, that in itself is a number of different images sort of come to mind. Everybody has a different idea. So, I thought it would be good tonight just to take a look at what a typical trading plan looks like and its implementation. So just sort of to dovetail the start of that, I highly encourage anybody who's new to the markets and new to the concept of trading to do yourself a favor while it's still free. You can go and look at this. Basically, it's a course that I wrote on how to invest. It just sits in Google Documents. It's about 70-80 pages. It talks about everything from basically what does a tactician look like, understanding how capital markets actually work, to different analysis techniques, fundamental and technical. Just touching on briefly on overviews, and then finally finishes with the idea of what are we as traders. I believe that we're basically small business owners. How should we act as small business owners? And every business, of course, has a business plan. And so, what does your plan look like, and how should you address things like asset allocation and stuff? So tonight's course show, Trading the Plan, is basically all about the trading plan. That's part 4 of this course, and feel free at any point to go and pull down this document. I see there's a few people on it right now, so that's good to see. And tonight in particular, I wanted to talk about the plan, right? So putting it all together. So, things, in broad, the course likes to talk about, both strategic and tactical planning. So we're not going to get too much into strategic planning tonight, but like things like where are you in your life cycle, what your goals are, those kind of things. Those are sort of strategic ideas that are covered more in part one of the course. Tonight we're going to specifically talk about, okay, we've already identified what type of person we are. We've already identified what our objectives are in the marketplace. We've already figured out what our sort of stake is to work with, and I'll show in these trading plans that we'll look at tonight, relatively small stake. And so now we're at the point of, okay, we need to understand rules, risk rules, and so we're going to come up with strategies on how to manage that risk side. And then secondly, we need to have tactical plans that are based on very specific criteria, and when those criteria are met, we have to be ready, willing, and able to pull the trigger. So, putting it all together, the plan, the first part we talk a bit about, why a lot of people fail, and how the fact that having a plan maybe will help you in getting over some of the normal pitfalls. We talked a little bit about strategic planning there a moment ago. And like I said, here we're talking about the tactical plan, and what's involved with that. Just a couple other things that, we as investors should always just keep in mind. What does day-to-day operations look like for you? I mean, me as a crude oil trader, I live on the west coast of North America here, and unfortunately that means that my day, if I want to trade the opening bell, starts at about 4:30 a.m. That sucks, but, that's a day-to-day consideration that I have to take into account, and it's a good idea for you to think about these things ahead of time. Can I commit to getting up at 4 o'clock every morning? This is my dream, so, what are the sacrifices needed to make to pursue the dream? We're going to, tonight, in the models that we look like, already assume that we already have all the capital that we need. But the long and short of it here is it may, some people will think, okay, well, I've got $5,000, great, I've got $5,000 to risk, and they want to go and trade a futures contract. Well, the problem with that is that there is maintenance margin, or what they call a performance bond that you have to put up that really shouldn't be part of the risk model. So let's say the maintenance margin on a day trade futures contract is $1,500. If you started with $5,000, you don't have $5,000 to risk. You have $3,500 to risk because $1,500 of that shouldn't be part of the equation. That's part of doing business. What kind of technology do you need? I was trading for quite a while with an old piece of crap computer, and it was really affecting my trading performance because my internet would cut out and my hard drive would crash, and it just got to the point where it literally affected my my trading. So understanding what kind of technology is required and what are the costs that are involved in that is also another consideration that you should think about. Time requirements, always a good idea to have an idea of, specifically when you're going to be required to be on the job, and when is free time. Trading, is one of these crazy businesses where you can literally trade 24/7, and now with the beloved Bitcoins, we don't even get weekends off now. So, it's good idea, in your trading plan. This is strategic stuff again I'm sort of talking about, but it's beyond the actual plan itself. It's sort of additional considerations. All right, so we covered just sort of some simple considerations. I think last week we took a look at this simple document in detail. I talked a little bit about the strategic part of it, sort of what's your overall market picture, and then what are my independent reasons for doing a trade, and then, you know, risk profile, and then finally, am I able to commit to my plan? So with that in mind, what I thought we could do is I'm sort of working away on building a 21st century version of my website. A lot of people love to bug me and joke with me that the website that I have right now looks like it was written in the 1980s. You know, this new site is going to take a lot of different forms over the coming while, but it's sort of something along these lines. And we're going to have the trading models in the main menu, just so you can quickly look at the different models that I trade. So, you know, and this is a very interesting cross section, because you'll see that there's 1, 2, 3, 4, 5 different ways that I trade the market. So, you know, just because you're trading doesn't necessarily mean you have to be handcuffed to any one particular method of participating in the market. You know, this first model is the bot model, and it's basically my day trading structure that I use if I'm considering day trading. And you'll notice that on my Twitter feed that I did a day trade on Friday and made you know, half decent, a little bit amount of money. Long and short of it here is it actually built up some good mental capital for me, which I needed because I had really gotten away from my trading plan. And as the commentary here of this trade in particular, and I actually like to do this. This is how much work I'll put into a trade. Is I'll come up with the analysis, I'll come up with the trading strategy, and then once the actual trade is done, I'll go and I'll make a post on something like a trading view, detailing my plan, detailing the setup, detailing where I entered, where I exited, why I exited, and sort of a general commentary on how I'm feeling for the day. You know, so you know that's from somebody who takes this pretty darn seriously. So that's how much work I put into to my day trading. So you know, that's this one particular model, and that keeps me pretty darn busy. Now, you know, the great part about it is, and this is basically how I want the website to run, is, you know, if you go on this menu item and you just click on it, you should basically get the first listing should be the trading plan. Because I find it fascinating how people have, you know, models and stuff like that for sale on the internet, but they don't actually reveal the actual plan. And they don't tell you specifically, well, I'm going to risk this amount of money. I'm going to take this setup. These are the reasons why I'm going to take the setup, and actually follow the plan. So that's the really good part about these, is that basically right at the top, first thing, boom, what's the model? What is the actual trading plan? So this bot model, for example, it's very simple, you know, like we talked about and I showed in the course material. You know, this stuff should be like a living document that you could basically recite in your sleep. It's not stuff that's supposed to make you feel uncomfortable. It's just that you know these indicators, whatever the 3 reasons that you are for taking a trade, you know them well, you have 100% confidence in them. Remember, as day traders, all we really need is about 50-60% accuracy to make good money at this, as long as our reward is twice as much as our risk. Alright, so this model, and I just break it down as simple as possible. We're going to start with a nice simple balance of $10,000. Our goal is going to be a 20% return on that money. And trust me, anybody out there in internet land, if you can get an average annual return of 20%, you will become very, very wealthy. And there's very, very few people in the marketplace that can do that. One thing that I really don't like, which I hear from people, is they make extremely lofty goals. I'm going to double my money. I'm going to triple my money. That's my plan. And then when they find out that, oh, well, I'm not right 100% of the time, and they find out that, it's kind of like the tide, it's ebb and flow, ebb and flow. You go through win streaks, you go through lose streaks. You go through win streaks, you go through lose streaks. If you can take that sort of business approach to it, and it's like running a hardware store, same thing. You have busy times around Christmas time. You have dead times around, in the summer. That's just the way business is. But anyway, for this model criteria and this business plan, we're just going to set a simple objective of 20% annualized return. Margin requirement typically for these kind of trades is about $1,500. Like I said, day trading crude oil. Maximum risk capital is basically that 10,000 initial balance minus the margin requirement. So we have about $8,500 in risk. The maximum risk that I'm going to take on any given trading day is going to be $500. Since my typical bot setups are about $150 in risk, what that means is that if I was really, really active on any one given day, I could basically take 3 losses in a row. Now, me personally, I don't really even like to trade that much. If I was trading exorbitantly and I took 2 losses in a row, I'd probably call it a day, which would be about 300. If you set a maximum trading loss per day for yourself, that's sort of your threshold. That, oh my God, I've hit this level, shut everything down. It's good to have that maximum loss in a day. And have it as, a pretty substantial number. Like I said, that would equate for me at $150 of risk a trade, literally taking 3 consecutive losses in a row. And me personally, as somebody who's been in the business for a while, if I get to the point, like I said, if I do 2 trades right off the bat, I'm best inclined to say, you know what, I'm just not seeing the market clearly today, and let's just shut it down and come back another day. So I very rarely ever hit that level, but that would be my maximum loss. All right, so I want to identify trades and trading ideas where the potential reward is greater than the risk that I'm willing to take. And so if you have those rules just in your plan, then you always sort of refer back to that model so that every trade idea that you're thinking about taking, you know that the potential reward is twice the risk that you want to take. So my rules here are maximum expected risk per trade. I really don't like to risk more than 15 ticks, and every tick in crude oil is $10, so that's $150. And because of the model that I use, the AB equals CD model, this bot, basically that's built into the actual trading model. So what's interesting is by definition, my model, if I follow it, spits out these 3-to-1 risk-reward ratios. And as I said, my maximum loss that I could possibly take on any given day is 3 times minus 150, or $450 plus commissions, and I pay $8 round turn. All right, so what does this bot setup look like? And what probably is good at this point is to, where do I have that? Let's put it, got it around here somewhere. There we are. Bot day trading model.
Brian, just to interrupt, is this a winning model?
Very much so. It got me funded.
Cool.
So yes, and the boys in Chicago love it when I trade this model. So yes, the answer to that is emphatic yes.
Great.
All right, so can I zoom in on this? First off, let's make sure that you can see what it is I'm seeing, because I don't know if you can or not. All right, so the model here just basically says that we're playing bullish and bearish harmonic patterns, this AB equals CD. And if you happen to see one develop, and the chart on the right-hand side of the page, you can see the first fib the A to B, and then the consolidation to C, and then the ultimate move to target D. This particular example, you'll notice that we hit the 66% level, and at the 66% level, we move our stop to trailing, and this trade was stopped out, if I'm not mistaken, at I think about a 1-to-1 risk-reward ratio on the setup. The point here is that if you only consider trades that have a 2-3-to-1 risk reward, then you can always get chicken along the way and get stopped out, and still actually have a better than 1-to-1 risk reward. So that's one reason why I really love this model. Getting back to so if you want to, and I'll just post this address here too, if you want to examine this setup in a little more detail, you're more than welcome just to check that out. Where was I?
1-to-1 risk reward.
Yeah, well,
Trailing
on this particular setup, it was 1-to-1. We can, on Friday, I had one that came in that I traded, and I posted the trade right after I did it. And again, we hit the stop to trail level, and I took 12 ticks on this. Was a 10 tick risk setup. So yeah, this was 10 ticks, so I took 12. So that was a little bit better than 1-to-1. The irony of it all is that it actually went to the D target shortly thereafter. So I got in trouble being a little chicken shit again. So it's interesting how sometimes your human emotions, a fear of giving back profits, can prevent you from actually making more. So that's always I always find that fascinating. All right, so just getting back to this published model, long and short of it here is, again, the trading plan, every step from hunting setups, 1 and 4 hours agree on market structure, 15-minute double bottom, double top, to stalking the setup. Basically, as I pointed out in this example, where is it? And I'd like to zoom in on this. I don't know if I can or not. Let's see what happens. Maybe I have to maximize my screen. All right, so I don't know how you zoom out. Oh, there we go. Okay, so this particular example, double bottom had come in prior to this, so we had our initial burst. So as the trading plan here says, step 3, initial burst between 400 and 750 bucks. Draw the bot setup fibs. So on this example, there's the 33, there's the 66. So the market came down into that zone. So the next step is draw the bot trade fibs, the ABCDs. So that's this fib pattern here. So you see where bot long entry, bot stop to break even, stop to trail, and where the market got stopped out. And trade entry, trade management, trade resolution. So the point here is that this is a very basically well laid out trading plan, and the good part about this is that once you get into this mechanics of following the model on a very strict basis, then a lot of the emotion of the trade actually gets removed. Where all you're doing is just following step by step by step. Okay, what do I do next? Okay, what do I do next? What do I do next? And for me personally, I've found that's very, very helpful because me as a human, unfortunately, I often undermine myself and do stupid things to screw trades up, kind of like I showed you this stop to break even on my trade here today, or on Friday. When really I could have probably just ridden it right to the ABCD target. That's fine tuning. I like the 66% rule. I like booking profits, and as I said, I had a profitable day on Friday, so I feel pretty good about following the plan and basically making money. So I'm very happy about the way that went. All right, so that's just one example. Each of these models has its own trading plan. The S&P 500 model is for more slower investors. You can see the signals, basically going back to 2008. Not a heck of a lot of signals. In fact, the last signal was a buy back in August, I beg your pardon, January 2012. So quite literally, this trade has been working for more than 2 years. As regular readers, or watchers, I suppose, will see, and I often talk about in my Monday show, these stock market trends are very, very old. I mean, I follow the weekly count of how long it's been since the last trend turn, and you can see all of these stock indexes, except for Japan, which is actually now starting to head down. They're all still pointing up, but their trends are getting extremely old. So it's just fascinating to see that the S&P 500 model, it has a very strict trading plan, and it's basically been long that entire time, and it has a monster gain. I mean, just an absolutely monster gain. So, but again, simple trading plan, all the rules laid out, exactly what you're supposed to do. Venture capital market. This is a very different way of looking at investing, but in essence,
Audio's gone, Brian.
can you hear me? Test, test, test.
Yeah, I can hear you now.
All right. And thank you very much, Andre, for being here, because sometimes these Google Hangouts I can drop, and if I'm here by myself, then the silly call just drops. So go figure. Just summarizing this is the venture capital market. It has very specific criteria. It looks for share consolidations. It looks for shares for debt. It looks for options to directors. We're looking for weekly technical bottoms, specific trade entry, specific trade management rules. But again, the important thing is that the trading plan is all clearly laid out. This model here is about trading off of this weekly commodity trend survey. Like I said, some of these trends can go on and on and on and on and make you a lot of money. And basically, that's what this model is specifically designed to do. Let's see where I can find it. And again, the trading rules are all laid out. What are the risk levels? What are the setups? From hunting to stocking to trade entry to trade management. Feel free, this page here, it's just a test page called a beta, if you will, but basically it is available if you are interested in just taking a look about what trading plans look like, and these are plans that are actually implemented in the market on a daily basis. All right, so it's now, geez, I guess about 5 to 6. I wanted to basically do a nice simple presentation. I did about half hour, 45 minutes about number one, what does a typical trading plan look like? What are the importance of trading plans? We reviewed, the document that we looked last week at. We talked a little bit about strategic versus tactical. And tonight, I've basically given you 5 different tactical trading plans that are implemented on a daily basis in the market. What a typical plan looks like, what's the purpose of the plan, what kind of capital is required, what's your risk anticipation, what do setups look like, how do setups get entered, and trade management of those setups. So hopefully that's of help to everyone out there in internet land and anybody watching the show. All of these resources, of course, are basically sitting on the internet. I'll put the different models in the chat. If you do want access to them, and I'll put it on the YouTube page. So feel free to take advantage of these resources. They're there to help. Let's go up here. We'll get rid of this. Okay. And if Lyndon was here at the present, we'd have him give a nice presentation. What do we got here? I don't see him here tonight, which is a shame, but you know, I suppose these things happen. I guess what I'll do is I'll just finish off with yet another example of you know, trading plan and how trade management sort of works. One setup that I like in particular, that I'm a fan of, is basically Gann's 50% rules. And so the trade itself goes something along these lines. You would consider a trade setup if the potential reward is greater than, well, ideally greater than 2-time risk. So what I saw here today, and this is the Bitfinex, was we had a nice double bottom that seemed to be forming here. We of course are contained within a higher time frame OTE. If we look at the higher time frame, there's the OTE level there, 435. And if you took this double bottom trade, basically your target, the breakout on the double bottom came in here at about 435, 436, somewhere in there. So I just noted long 436. Your stop would be just underneath these lows, so 429.37 area. And your target, I just did a simple 2-to-1 risk reward, and I came up with 449. I suppose if we got a blast up to 446 and it failed, you could always hop off. You know, that might be Mr. Gann, but I would be comfortable just working an open order here at 449. It's interesting to watch how this trade is still working. We did have a run up here to the 38.2 fib. That's often a significant short-term barrier, so that's basically exactly what happened. And ironically enough, now we might be setting up a nice inverted head and shoulders where the head is something like that, and we clone, and the target, if you get the breakout through the neckline, would be somewhere up in there. And what a coincidence, look at that target, that hits the OTE short sweet spot right on the nose. So, you know, I could justify taking this setup if I was a day trader, if I could follow a trading plan. Currently I have actually, I was very fortunate. I hopped off my one Bitcoin up at 500, and I've just sort of been patiently waiting for it to come back down into the 400 area. So with the one coin, I don't think it makes a lot of sense to try and trade these moves. I have tried to trade them, and you know, considering you make a couple bucks in commission, you know, even if you did this trade, it would work out to $8 profit. Versus a $6, $7, $8 potential risk. So, you know, the sad part about it is that because the commissions represent such a high level on Bitcoins, it's tough to get that 2-to-1 risk reward on a lot of these little setups. So I have to wait for a higher time frame one. Having said that, you know, if you have deep enough pockets and you can play the percentages correctly, you know, I can see that setup. That's not totally unrealistic. I suppose if you bought 2, you'd probably want to let half of it go on this target tag. Stop goes to break even, and then just see where the rest of it takes you. Anyway, that sort of summarizes tonight's presentation on trading plans. I've given you a number of working examples of trading plans in action. If you tune into Monday's show, you can see the options trades in action. If you tune into Wednesday's show, you see the Bitcoin trades in action. I'm constantly posting my day trades in crude oil, the bot plan, so you can see those in action, and my S&P 500 models for little old ladies who just want to be invested in the market. And that's just a phenomenal model. And believe it or not, even through all of this craziness, the model still says to be long. So little old ladies, hold on to your stock. Don't do anything. Don't get suckered into pulling the trigger. All right, so that basically summarizes what I have to say today. Look at this. This is interesting. You see the little consolidation that's coming in here, eh?
Yeah, that looks nice.
So, this is an excellent testament to coming up with models that work 50% of the time at least, and ideally, my CRInvestor's 2 rules of investing. Rule number 1 is your model should work at least 66% of the time, and I've found that double bottom 50% tags do work 50% of the time. Very interesting to see how we did get a big run up and sort of willy-nillys might have panicked and dumped here and taken a small profit, and yet ironically enough, if you just buy and hold, lo and behold, look what's coming in here. We actually have another double bottom coming in here. Look at that, eh? And we just spiked.
It's funny when we actually hit the initial double bottom right at the bottom. This guy said, "Oh, why are you even going to bother buying here?" And I said, "Well, this could go 445, 455." And funnily enough, those are the 2 key levels here. I think 445 is initially going to be, I think that's a ABCD target right now, 445, and 455 also looks pretty nice too.
Is that on Stamp or Phoenix?
I think I run it off Phoenix, that ABCD, but
All right, so I can see, I don't know whether you can see, yeah, you can see my screen. So I can see this 445, that's Mr. Gann, right? So, and really that's in our target window for this setup. A spike into there wouldn't be a big surprise. And then, of course, if we do break out cleanly through this 442 area, considering that the OTE short sweet spot, we know how much the market loves that, and we have this inverted head and shoulders. So, not really too big of a surprise. The question ultimately is, can you trade enough size and taking into commissions and slippage to make it worth your while to try and take $10 from the market, versus the amount of stress that you're going to incur.
yeah, I mean, I personally have been going absolutely bonkers lately. I've been trading $5, $7, $10 swings like over and over and over. And you get $100 here, $100 there, $100 here, $100 there. Before you know it, you've got another coin and you're rolling.
Yeah. Well, if like my little model, if I could risk $150 and look to make $400, $450, to me that makes sense. Because I've got one coin, to risk $8 to make $8 doesn't make a lot of sense to me. But anyway, that's that's talking more about money management than anything else. What I have to wait for as Mr. One Coiner is, really, it's in my best interest, and I think the public would appreciate this. Is I really have to wait for this chart to turn, and so what's interesting is we might be having a double bottom come in here. This is very realistic. This is a key low, and we have a nice railroad tracks low here. So we'll see how this battle goes. I mean, this is a significant battle point here. So we'll see how this battle goes. You can see how the market's basically defined its range.
It's funny. I was going to say, it's funny that you just called that a double, possible double bottom there, because I actually just charted that. I'm on the daily if I move it to the 4 hour. I just charted that myself, and it goes, if it is a double bottom, the harmonic ABCD, which we know Bitcoin loves, takes it to the big move from 540 to 420, takes it right up into the 38.2, and pretty much what everybody's been going on about for a while. Top of that candle there, top of that candle is 38.2, and it's the ABCD, and it's 470. So watch out, 470.
Yeah. Now the
If that
problem is that when if we tag that, that might be a trap. So I'd be very leery about buying that 470. But we might be starting to see the smatterings of a bottom. Obviously it's too early to declare victory, but this is an interesting, this 2-bar reversal pattern here. If we take these highs out, and that's 444, it's going to be tough for the market to get back down in there and bust that. So only time will tell. Looks very interesting.
I like your choice of word, smattering. The smattering of a bottom. That's what it's been like, isn't it? Hey, look at that nice little candle on the left-hand side as well on the other bottom. See it? Yeah, that looks nice.
The doji?
Yeah, doji followed by the bullish.
Yeah, well,
engulfing.
so this is what I call the fractal pattern, eh? So it's there, 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 right? And the fractal is confirmed through here. So this market structure itself, right, it was confirmed here. So what that means is that any dips down into this area, this is where the institutions are going to defend this. Right? I mean, the market was heading down, and the institutions stopped the down move and started the move back up. So somebody's got a vested interest in defending this area. So not a big surprise it zipped down into that area, and we got one heck of a battle.
Yeah, yeah.
I think it'll be interesting to see how this 2-bar pattern. If we don't go take out this 444, then and we head back down, then this 2-bar pattern is meaningless. So and look at the splotchy trading, on no volume. This is interesting. I mean, they might just crank it right up here. That could very easily happen.
Yeah.
Anyway, fascinating stuff. What's also what I find coupled with sort of the broader analysis is actual trading plannable trade setups. There are setups there that you can actually have a trading plan that you could be literally trading this market off of.
Is your audio going again, Brian, or is he gone?
Of late, Andre?
I say I can hear you again now. What did you say, Brian? Sorry.
I just said, do you want to talk a little bit about your trading psychology of late?
Yeah.
Do you follow a trading plan?
My trading plan is basically, it's really simple, and that is, I'll put on my screen share.
Sure.
And my trading plan is really simple. I look for 3 reasons. Sometimes you get lazy, or you're a bit bored. You'll go off 2. Sometimes you'll be really bored and you go off 1 on a hunch. but really I like to try and keep it pretty tight. I look for 3 reasons, and my 3 reasons are always my MACD, my RSI, and my Willy. These are my weapons of choice out here in the fields, and so really, this is how I like to play. I like to look for bullish MACD, like we had earlier. I like to look for some bullish momentum building. That's good. I like to look for some bullish RSI coming on, like here. So that's the 1, 2. And then finally, I like to look for the third signal, which it wasn't really there, but it's almost like a divergence on the Willy. And I know Willy can just get embedded down here, but if you notice, Willy bottomed out here and it was climbing, but it made a new low. And you say, well, is that really divergence on Willy? Is that even possible? But it's actually what happened here. Look what happened here. The same thing happened again. We had the high, which which had all the bullish, you know, stuff going on it, and then it put in the second high. It might have been more clear in the other one, but it was actually weaker on the Willy. So you can use Willy to look for divergence as well. So yeah, I like to look for 3 reasons. Three reasons, and I feel really happy. 2 reasons, and I'll probably still take it anyway, depending how I feel. But that's what I look for, and I look for two other signals really, and that is euphoria and hate. We've got euphoria, exuberance, confidence, and we've got some bearish signals going on. Great, a sell. We've got some fear, strong fear, abandonment, loss of hope, and some bullish momentum building, some bullish RSI. Yeah, it's a buy. So those are my 2, and I'll wait all day. I'll wait all day, all day, all day, all day. And I'll wait for the perfect time to offload or the perfect time to buy. I might just make 1 or 2 buys a day, and I just wait for those ideal conditions. And like we're kind of approaching a nice point here. This is going to be an interesting point here. But the other thing is if I'm trading on margin, I will only trade probably the maximum at about 40%. And the reason why I do that is because I like to leave some left over. Because if you short and it goes up, you might want to say, well, I thought it was a top, and it's just put in this bearish divergent super spike, and you want some margin left over to just load on the top. And then it might go up another level, and you think, oh, now what do I do? But it's nice to have that margin left over to play with, to kind of keep yourself flexible. Whereas if you commit 100%, you can be in the boat. But if I'm trading with not margin, then much more aggressive as well, much more aggressive on the trading.
Well, I like Joe on Monday. He is my helper on Mondays, and he was telling me he actually likes to pick like several levels, and as like if he was shorting, as the price would go up, his bet size actually gets bigger. Yeah, interesting strategy.
Yeah, I mean it's cool. It's cool. I always did that. I did that once, and it's cool until it doesn't work, And it's like you said. You have winning streaks and you have losing streaks, and how you described it like a tide. I mean that's exactly what it is. It comes in, it comes out, it comes in, it comes out, and it is just like a tide. And sometimes it's like you're in tune completely with the candles and the sentiment and the feeling and the direction, and you're just absolutely perfectly in tune. And when that happens, that's really good, and you're going to win. But sometimes you're going against the grain. You're shorting, it starts rallying, you go long, starts going down. Sometimes you run against the grain, and like you said, sometimes when that happens, the best thing to do is just to say, you know what, I'll just leave it today.
Yeah, it's and that's the sign of a professional. There's what's really sad is that a lot of people assign ego to this, and what ends up happening with people who are really strong-headed is they'll end up literally. They might be small profit, small profit, small profit, small profit, and then they let one trade go against them, and they're like convinced that no, they're right and the market's wrong, and the market just keeps going and going, and it can literally bankrupt them.
Yeah.
That's really the sign of a pro.
Well, I think it's the easiest thing to take your profits early, and it's the hardest thing to cut your losses early, because when you're showing profit, you just want to bank that profit because you've made profit. But when you're making a loss, you just think it's going to turn around. It's going to turn around. I know it's going to turn around. So it's so easy to cut the losses early and let the losses run. It's so easy to do. But I mean, just the other day, I think 2 days ago, I went long too early, and it dropped quite heavily against me, and it bounced back up, and I took some off. And then it went down again. I reloaded, and it bounced back up, and I took some off. Anyway, I got it down to like just break even in the end, and then I sold it all. So I just broke even. I just got out, and then it rallied like hell, and I would have made loads of profit after. And yeah, that was just one of those days where it just didn't work out. And I actually had probably 2 days off after that, where I watched the charts, but I didn't make any trades for 2 days after that, because I just needed to have a bit of a reassess and whatever.
Yeah, well, again, you're a great trader. I'm privileged to know you. You say all the right things. All right, so it's about 20 after here. I'm just going to pop over to the YouTube page and see whether we have any questions over there. We have a few people watching, so we'll just ask any questions today. So, because Landon isn't here, I don't think I'm in a big hurry to extend the show too long. I mean, I think we had a pretty thorough examination. I don't think there's any need to go into any further. Yeah, so, I really think this is an interesting level on BTC. We'll see what happens here off of the 4 hours. We might be seeing the smatterings of a turn. Tough to say right now. There's the 15-minute trade. As it's going, it's interesting to see that there is a setup here working for the two models that I trade, so we'll see how this day trade goes. Interesting. Thank you very much for filling in tonight, Flibber, and I appreciate your analysis and your commentary on trading plans and trading psychology. I really respect your trading acumen. So word to the wise out there in internet land, if Flibber's suggesting something, it's probably worth paying attention to. Let's see what we have here. I guess, Osteen, you got any questions? You feel like chiming in here? So a couple people in the lounge today. It looks like it's fairly quiet. The weather's getting a little better, so it doesn't surprise me that the crowd might thin out a little bit here. I think for the purposes of the YouTube show, probably wrap it up here fairly shortly. And I'm going to try one more time at our little theme music, see if I can get it to work. It didn't work for me before, but just keep banging away and something's probably going to give. But if I don't see any questions, I guess, Austin, you're good to go. YouTube, don't see any questions. Thanks, Chris, for at least acknowledging there, so that's cool.
Well, Brian, listen. I like the bot model.
Mm-hmm.
I've seen you talk about it. I mean, I kind of do it anyway, but I didn't know it was quite so structured. And I follow GBP USD Forex, and I often trade that when BTC USD is quiet. Just for like some extra entertainment. I play it on the 3 and 5 minute, but
the currencies love the. That's that's not really ICT, but yeah, I mean that's where I learned the ICT stuff is in currency land. Anyway, your point is?
My point is I might give the bot model a go tomorrow on GBP USD and let you know if I have any wins on it.
USD. Well, so the model's very structured, so can you see my screen right now? Let's
Yeah,
make
I'm
sure
watching.
yeah. So this is 4 hour. What's the market structure? We're pointed up right now, right? So that's important to note. What's the hourly structure? Pointing down. So a little bit of a mixed message there. Make sure that those two are in agreement before you pull the trigger. Then 15-minute. Do we have a double bottom working? There's a double bottom here.
Zoom out, Brian, on the on the chart.
This is now the 15-minute chart.
Yeah. Okay, that's better. Yeah.
All right.
Just to get a better picture on it.
The-
4x does that. It just goes mental like that, doesn't it?
Yeah, you got to be careful, right? So, double bottom here. So you might have a bull flag here. And really that's what these are, right? It's bull and bear flags. So now your levels are like here. So we done the 33, so the bot's alive.
What do you mean the bot's alive? What does that mean?
Well, you had your initial burst, right? Boom, right? So there's a realistic possibility that the market just does this and then keeps going, right? Whoops. The question is, what the bot's hunting for is the bullish or bearish ABCD pattern. So the key elements is of the, and let me see if I can find it here. Hold on a second.
Very well organized in your folder structure
So
there. Imagine how clean your house is.
well, anyway, the bullish ABCD, right? A key requirement is that the point from B to C is at least 33% to 66% of this A to B move. Okay, so what we're doing is we're saying, is this a bullish ABCD pattern? If you get a correction less than 33%, then that doesn't qualify for the bullish ABCD, right? I mean, it's very realistic. We could get this thing just pull back here and then continue on. And what that means is that the initial burst move might be here, right? So you have to let that initial burst move sort of play itself out. And the way you sort of figure that it's played itself out is, does the market correct into the 33 to 66% zone? So it's done that. At the point that it does do this, then the bot itself comes alive.
So once it's between 33 and 66, so say it's gone up there now, and say it did retrace between 33 and 66, at what point do you then decide I'm going to take the entry?
So you wait for the 33 and you say, okay, so this could potentially be a bullish or bullish ABCD. So then what we're going to do is we're going to replicate the first fib, right? This first move, we're going to replicate that. Only now we're going to flip it around. So we're going to set it up as the trade levels, exact same distance, but now we're going to really examine the different levels of that distance. So we've replicated the first move, and then we've set up the bot level parameter. So there's 25%, there's 50%, there's 66. So our premise...
Why are those fibs?
They're not fibs. They have nothing to do with fibs whatsoever. They are just, they are breaking this bull ABCD pattern into manageable chunks. Does that make sense?
Yeah. Okay.
All right.
So why those levels then in particular?
Okay, so if we think that this is a bullish or bearish A, B, C, D, and we can just write here A, B, C, D.
Is this your favorite trade, the bot trade?
Yeah, definitely. What ends up happening is we have an idea of where we think the market's going to go, right? By first drawing the fib off of the initial burst run and then replicating it, if this is a bullish ABCD, then the market will not come back to this C points, right? So we're going to assume that it is a bullish ABCD, okay? And if this market's not going to come back to this C point, then we'll use this C point as the bottom of this projection. Does that make sense?
Mm-hmm.
Right? So basically, we're expecting the market to go to this D point, right? And if we draw our little rays, you know, because we do them so often, boom, boom. Boom, boom. Right? There's that target. Right? Make sense?
Mm-hmm.
So what we're doing now is we're saying, okay, potential bull ABCD. We do have a 15-minute bottom. It's not really the best looking one. What I really would like to do is see an OTE level that was much higher that the market could rally into. So, you know, if we did an OTE here off of this high to this low, what I'd love to see is that the OTEs and the bot target line up. That's beautiful. So let's just see if we get lucky. So here's our OTE level. Not quite. So we can see, and you in your traffic areas, right? We can see the battle zones. We can see that there's going to be a real tough fight in here, right? So this trade, it's gonna be challenging. But having said that, there's one of those silly. Was that a message to you or me?
To you.
What just happened there?
Is
I
it a PM message that guy's PM'd you?
Oh,
Gravity?
this guy here. I think the
Yeah.
confusion is you call the bot levels fibs, but also that they're not fibs. That's right, they're not fibs. So I apologize, Gravity, and I'll work better on being clear about that. Okay, so if you were going to take this setup, right, and you believe this was a bullish ABCD pattern, I'm a little leery of it, but let's just assume that you were. Ideally, what you want to find is, and this is basically how I traded in crude oil, is I want 3 lows to work against. So my stop is going to be right below this low here, right?
Mm-hmm.
My stop is going to be right down in there. So 1 low, I got this low to defend me. 2 lows, I got this low to defend me. 3 lows, I got this low to defend me. So I could justify, do you notice how this is a fractal pattern right in here? Like you could argue that this is a 3-bar reversal. You see how we made this low here, right? So there, there, and there. And so your buy signal is actually there. You see that? So, I mean, I could get bullish structure, and I've got 1, 2, 3 lows to work with. So if I'm thinking that I want, and half a trader's life is, just being aggressive, right? Seeing that there's the potential for there and going for it, right? No guarantee that these things are going to work, right? But the trade potential is there. So my long entry is this 168.708. my stop is below the 0 point, right? So because my ultimate target is point D, by breaking the trade into segments, this 25% level, if I'm assuming that the market's going to go to here, and this is a bullish ABCD, then that means that I'm also assuming that this C level is not going to be taken out. So that means that my risk window is there, right? I'm willing to ride this trade through that risk window. Does that make sense? And my reward window is ultimately up to here. So by definition, the trade has a 3-to-1 risk reward built into it.
Nice, but this is maybe a criticism, maybe a query. I don't know. Say it does make a new low, and you get stopped out on the bottom of that candle. What do you do then? Do you say?
Okay, so basically, you are making a vote when you take this trade, and that's an important vote. You are saying, if you're thinking this, I've done the higher time frame analysis, and I believe this is a key level, and I'm a bull. Now, we looked at some of the higher time frames, and they were kind of disagreeing. So, that in itself might be a debate. You heard me talk about, and through the presentation, I said, I'll plan to take no more than 3 losers in a row. And that often means, as a day trader, that I might take this setup here, right? And it gets stopped. Boom, I'm stopped out, right? At that point, price has worked its way down, right? As long as price is still above this 66, then I simply have to come along and readjust my bullish ABCD pattern. So now my next trade setup will come on a bullish resolution through this level. Do you understand what I'm saying?
Yeah.
So, first and foremost, how confident are you in the momentum of the market, right? Do you have 3 lows to work with? So, doesn't surprise me they took this low out. Wouldn't surprise me they take this low out. And ultimately, if they do take this low out, then I'm going to say, yep, it's down, and I'm done. Then, I'll get a panic low. And probably what will happen in price is it'll go down like that, and then come and do this, and then away we go again, right? And so then there's the next trade setup. Does that make sense?
Yeah. Yeah. It looks like a nice strategy because, like you say, it's 3-to-1 risk-reward ratio. So if you actually lose 3 in a row, it's like you've only got to win one or.
That's right. That's right.
So it's a nice plan.
Well, I like it because now keep in mind that this 50 level and this 66 level, they're additions. Now it turns out mathematically that if a bullish ABCD pattern can get up to this 50 level, then more times than not, it will not come back down to this 25 level. And if it does, then it means that the pattern's failing. So the people that I learned this from, just have a strict principle that if it hits this 50% level, then your stop just goes to break even. And, that means basically, at worst case scenario, you just walk away from the trade scratch.
Yeah.
Right? And so we see this trend line here, right? And I don't think it's a coincidence that the trend line is like this. So, let's say we break out, we come up to the 50% level, right? And you'll notice that the trend line just so happens to be right at that 25 level. It would not surprise me whatsoever to see the market, basically come down. And I've seen this happen on numerous occasions. I've been in trades. Don't know why it's not doing this. Look at that. It's not working. Oh, silly boy. It can do this. It'll just tease me. You know, it won't come back to that 25 level. It'll just tease me, and then resume. So it's handy to have that 50% rule, because then at the very worst case, you know, I mean, what we're supposing here is that we're going to get a test of this high, right? If it trades one tick above, 2 ticks above that high, then you've hit that 50% level. And what we're saying, I mean, you know, just classic technical analysis, right? If we take out this high, then this bull ABCD, I mean, what we're looking for is the market to do this, take out the high, and then vroom, straight up, right? That's what we're looking for. We're looking, you know, ideally this model works best when there's a whole bunch of stop orders, and this previous high, you know, in this case, you know, this is, you know, this was a pretty deep sell-off, right? That was pretty deep. So as a result, the OTE is pretty close. Ideally, for these ABCDs to work best, we'd love to have the high up near the D target, you know, the OTE, like let's say the OTE sweet spot was there, you know, those ones work the best. They're awesome. You know, the fact that this high here is here, and the OTE is here, you know, this is probably a situation where my rules are probably going to save you a lot of headache. So at the 50% level, which is, gee whiz, look at that. It's right at that 61.8, right? So if we hit that 50% level and she fails, then you just walk away from the trade. Big deal, no big deal. We get up to the 66, look, there's the OTE, right? So then your stop at 66 becomes trailing. And what you should ideally do with a trailing order is you have to be patient and let the market pull back and then make a new high. So once you actually see this market structure where you made a new high, then you can move your stop down to here, hence trailing, right? But I'm so damn impatient when I'm trading crude that as soon as the market runs in my favor like 10, 15 ticks, I want to get out.
Well,
And like I said, I haven't been trading very well lately, so hopefully I'm getting myself back on a good track.
That's exactly what I said. When you see profit, you just want to bank it, don't you? You know.
Yeah, but that can, you know, like these, what I find, you know, like I showed you here, right? I mean, I've said this to the group too on a few occasions. That's the disappointing thing, is I thought I just had it handy here. You know, those people that are watching my videos on a regular basis, they will recall that I have said this exact same statement a few times now. So me getting chicken shit and booking profits here, I didn't do myself any favors because the market did go to the D point, right? So really, me, you know, being Mr. Smarty Pants and feeding into human emotion, you know, maybe we get chicken shit and dump it somewhere in here, and then bam, market jumps up to hit that D point, and you're like, oh man.
Yeah.
And I've seen that happen lots of times. So, you know, just the way I sort of, you know, hand drew this, if I was a prudent investor, then I would move my stop to here, then move my stop to here, then move my stop to here. You know what I mean? As opposed to just getting chicken shit and just getting out right here. Anyway.
So that's a really interesting model. But what, you've got a lot of other models, have you? Trading models.
Well, this is strictly a technical analysis model, right? And, you know, I bill myself as the rational investor, which means that I'm both fundamental and technical. So a few of the other models run pretty heavily on fundamental analysis. And then the S&P model is just one very simple very simple technical tool, and that's all it is. I like to have the 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 fundamental story, the earnings story, the interest rate story, all that is a backdrop to explain the technicals. But and let's see if I can pull that page up for you. Well, I'll just show you the blog as it is now. Where are we here? This S&P 500 model has been spot on since ever since I basically started it. Absolutely beautiful, and it just has one very simple investor rule: where does the 13 EMA cross the 30 SMA on a weekly basis? Very, very simple. And like I showed you, the return since 2007. I mean, basically, it got you out of the stock market in 2007 before the meltdown even started, and it got you back in when everybody was just giving away stocks.
Yeah, what moving averages were those?
Well, here, I'll just show you the model. You can bookmark it. Like Julian and I are putting together the new web page now, so it's not going to be on this site in particular for too much longer, but basically you're more than welcome to check it out here. It's the S&P 500 model, and like I said, you can just go pull the trading. Here is the trading plan. It's just as simple as that. And entry signals 13-period exponential moving average crosses from below to above the 30-period simple moving average. Exit signals 13 exponential moving average weekly crosses from above to below the 30-period simple moving average. And here's a image of the S&P 500 chart. And and this is the hardest thing to do as investors. Is here was the buy signal, back here, and basically these moving averages have just sat nice and comfortably in bullish, and your best bet was just to be long and don't do nothing.
Yeah.
That's tough to do, but it's a great little tool for investors. Guys that are looking at Bitcoin quotes once every 15 minutes, it's a terrible tool because they just lose it. They lose patience. I want to do something. I want to do something.
Yeah, I know that story.
So anyway, yeah. So and so these are the different models, right? So the bot is very mechanical, all technical, no fundamental. The weekly commodity trend survey, that's just strictly double bottoms and double tops, and Gann's 50% rule. That's all it is, right? It's just double bottoms, double tops, 50% rules. And here's just an example.
Wait. Don't waste all your bullets in one shot.
What?
Don't waste all your bullets in one shot. You should save these models for the next one because they're really interesting. The models, they're good to see. So I would say save it for the next one.
Yeah, okay. So maybe we'll just leave it at there for tonight. All right.
Yeah, leave it there because that way I'm interested to watch the next one now because I want to see the next model.
All right, so next, tune in. So actually, we gave the secret away to two of them, eh? So we.
Yeah, that's what I mean. Yeah.
Yeah, and really, I don't mind. If the public can learn off of this and use this information to benefit them, then hey, all the power to you.
Yeah. Well, I fired up your PDF, so I'm going to give them another read tomorrow, just to for the bot model, just to kind of get those ratios. I'll make a little template on the fib levels, for the ratios.
Yeah, well, here, take this. So, and use this as sort of your template to play with the bot model. It's just a nice, simple chart. See if you can create it yourself.
Yeah, okay.
Right?
Yeah, because I'll give this a go tomorrow. Maybe I'll scout out multiple different forex charts tomorrow and look for one where we've got an ABC.
And as I said, and that's the great part about trading, multiple markets, is that you can shop around. Maybe the Australian dollar, Canadian dollar cross has a bot setup where the point D target is right at an OTE short sweet spot. You love those. Those are awesome.
Yeah, well that's it. I'll look out for that tomorrow. But we should also do a video. Purely about trading chart research software, because I downloaded this software and it uses the Yahoo data, and it will scan through every single chart and it will look for certain signals. Like it'll look for like RSI wildly oversold, it'll look for MACD divergence, RSI divergence. So you can just scan every single chart and just say, show me ones with RSI divergence, MACD divergence, and wildly oversold.
Well, so that's I tried to do that with my algorithm,
Yeah.
and see if I got a web page here to show you. Here, I'll just hit home here. My algo, the Delacour index, and so what I wanted to do under screen results, and actually it worked very, very well. And keep in mind, I only follow about 250 issues. But pardon me?
You got a login on the site.
On my site, yeah.
Yeah, how come?
I don't know, because I'm an idiot.
Okay, yeah, go on then. Yeah, so
this gives all of the signals. So, my Delacour index is a culmination of like 9 different technical indicators. So the DI itself gives signals, but I also, on the daily screen, all the stocks that have RSI less than 20, RSI Williams percentage R, and then combinations of RSI bullish 13 EMA cross, RSI bearish 13 EMA cross, OBV standouts, all the 13 EMA bullish cross, then other systems, RSI and 13 EMA bullish.
Who's coded all this?
Huh? What?
Who's coded all this?
Me. I wrote it all myself.
You wrote it all to scrape the data from the Yahoo feed and look for all the...
Yeah.
Look for the crosses. Cool.
Well, no, I didn't. What I did was, what I do is I access the Yahoo open source database, and all the stock quotes are available in there. So what I do is on a daily basis, I go pull down all the data for each stock, and then I crunch all these indicators myself.
How do you calculate like 13 EMA cross and all that stuff?
You want to see?
Yeah, show me.
It's a lot of code.
What's it wrote in?
What's what?
What's it wrote in the code?
PHP, server-side scripting.
Oh yeah.
I could just show you. It's pretty, what the hell.
While you load it up, I'll put on my background music for you.
Okay.
È un soffio che accarezza la mia pelle, che nasce dal suo cuore a me fedele, mormorando dentro me la dolcezza del suo amor, sussurrando gentilmente tenere parole, nell'aria il suo profumo che mi avvolge.
Alright, so this is the stock list that I update, my database goes through. And it just goes through the array and picks each stock on its own. So once it's got the stock, then it goes through and it runs a whole bunch of individual scripts. Like it goes and gets the historical data, then it calculates all the technical indicators, and then it plugs all that into the database, right? Then there's scripts, at the end here, where it goes through the database and it just filters out all the stocks that have made RSI crosses and all that kind of stuff, right? So the actual program itself, like if you look at any one individual one, Like if we just looked at the S&P 500, for example.
Where have you found the time to code all this stuff, Brian?
This is over years and years and years. So, what it does is it goes in the database, gets all the Yahoo data, right? So that's like a script right there, get the Yahoo data, plug it into the database, right? Then it goes and it calculates all of these, say 6 EMA, 13 EMA, 30, blah, 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 right? All of these different indicators it calculates. Then it gives a score, right? So this is the indicator score for the daily S&Ps. So is the price above the 6 EMA, below this, whatever, blah, 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 gives a score. And then it does the same thing for the weekly, does the same thing for the monthly. And what ends up happening is you get a cumulative reading, right? So this is the cumulative reading here, right? And so then the cumulative reading is daily, weekly, monthly, which creates a cumulative. Then you have moving averages on the cumulative. So here's the cumulative score. Here's the fast moving average, the 13-period exponential moving average, and the slow moving average. And it gives those a score. So that's how the DI works.
So do you just have right now an absolute abundance of data, or and kind of like no useful interpretation? Like what I'm saying is, are you using the data you're collating there?
Right. So what ends up happening is the DI gives you buy and sell signals. So if you can actually go through the watch list, and on a daily basis, the DI will tell you if you should be long or short something. So
Are you trading off that?
I can if I had capital to trade, sure. Right now I'm fighting, the sad part about it, right, is they always say it takes money to make money, right? And if you don't have capital, then it's very tough to make money. So I've spent the past couple of years working with this stupid day trading firm to try and build up some capital to move on and do these other projects. So some people could argue that I've wasted some time, but I've worked so fucking hard with this company. And then, I just came along in December and stumbled along Bitcoin and all you guys, and I've made more money trading Bitcoin here and collecting Bitcoin donations over the past 5 months than I have trading crude oil. But that's my own issues that I have to deal with day trading. Anyway, the point here is that these are all scores, right? And they give you signals on a daily basis, and they're usually pretty good. So like here, we got a short-term buy signal in the bond market. Let's see what it looks like.
Oh, did you hear my little background music I put on before?
Yeah, it was beautiful. Way to go. Thank you.
Cool.
I couldn't figure it out. All right, so here's the bonds, right? And so let's pull up a trading view chart of what the bonds look like. So the DI told you there was a short-term buy signal in the bonds. Keep in mind these are daily, weekly, monthly charts. So I would love to be able to get this to the point of
you want it on like the 3-minute on all these charts.
No, actually, I think the hourly chart would be perfect for this. It would just be awesome.
Okay, get it on the hourly then, and get it on every single one, and get an automated trading bot on there.
Oh my God, you could kick ass. It'd be ridiculous.
And just give it 150 quid to start with on each index, and let it go.
All right, so it's just interesting. So this is so the model here was telling you it had a short-term. Was that a short-term buy or a medium-term buy? Yeah, I think it was a daily buy signal. So and you see the bonds. That's pretty powerful. I certainly wouldn't get in there and short that. And look at you.
Buy.
It's giving a short-term buy. It's giving a double, the double bottom breakout here. This is a very bullish-looking chart.
I just said, oh, get this automated bot on all of them, get it trading this data, right? Well, that would be a great idea.
and there's other people out there that are doing the same with their automated bots. And then it kind of like the human element kind of fizzles out, and it becomes of who can create the best bot to trade against other bots, you know?
Well, but what you have to understand is that the bots are only as good as their programmers, right?
Yeah, yeah.
So,
That's,
I mean, what I really love about the DI is that it is unbiased. It just, if something's breaking out and it's a buy, then it'll spit it out. Let's look at this XLT. I mean, it's giving a sell signal here. I have no idea what it looks like, but let's see what it looks like.
all the arrows are saying up.
Yeah, I know. So, and that sometimes happens, right? You might get, oh yeah, look at that reversal pattern. Market's so. Let's see what it looks like.
Yeah, but what I'm saying is, so say you've got all these different bots that have been programmed by these people to kind of interpret this data in different ways, and if you like, it's a competition.
XLI.
Who can make the smartest bot
Yeah.
to trade the data?
Oh, look at that. Wait, now see, I could short that. What do you think of that chart? You know?
I can short that too.
So
Triple
again,
tops, it's what I call, well, we call in the Bitcoin world, it's a triple tit, because it's gone up and it's just done ping, ping, ping.
right. And so that's what I love about this model. I mean, it's very, very good, very handy. And the thing is I just, and that's the Dane. Like, so what I really want to do with Julian, and he kind of looked at my site and said, man, there's a lot of information here. I mean, I'm basically going to put the DI on the back burner while we just get this basic model going. Like, the DI is another totally different model to all of this, right?
Mm-hmm.
I just want to get these simple models up and running, get some subscriptions going, demonstrate how well they work, and then, my next big project will be to get the DI. Because literally, we could get the DI up and running, and it just trades on its own. It doesn't even need, I mean, look at this one. There's a nice 13% gain. It's just, oh, that's that BBH. That's a different one. But, some of these longer term signals are just beautiful. Like, what's, I mean, you just go through the list. I mean, how many negatives do you see? You just don't see that many negatives. It's absolutely incredible.
You need direct market access,
Yeah.
Like there's a good site that I was on the other day, because not many companies actually offer you direct market access.
No.
Often most companies are more just like gambling. You know what I mean? It's you just watch the chart and you just bet if it goes up or goes down. And often the charts themselves that you're using are their own indexes, not.
Wow, what's that?
What's what? Their own
I just
index.
muted Julian. He's moving or something.
Sorry
Yeah.
about that.
That's okay. All right, so it's 7 o'clock now. I think I'm gonna wind up the live show. Thank you everybody for participating today. Thank you very much, Andre, for your filling in for Landon today. Took a look at some very interesting stuff. We covered some good trading plan stuff, so I'm pleased with that. We talked a little bit about Bitcoin, so you can't have a day in the life without a good old reference to Bitcoin. We took a look at some other markets that are moving, so I'm really pleased with that. And we also took a look at one of the algos and actually a couple of the different models that I trade off of. So you guys got a little bit of an extra treat here. Flibber conned me into going down that road, so that's good. But then he stopped me from giving away all my secrets. So you'll just have to tune in for our next show to see what model we're gonna crack open and dissect for your learning experience next show. So I want to thank YouTube and Google for the Hangout experience, and thank you everybody who came into the lounge and participated. Osteen, Julian, and Andre are in the lounge now. We had a few other people in and out through the show. If you did enjoy the show, if you did learn anything and you'd like to reciprocate, you can always go to the rationalinvestor.ca site and click on the donate button, and I'd be more than happy to, or I'd be very appreciative of any donations that are made. Thank you very much in advance. Again, thank you, Andre. Good luck with the British Pound. I'll want to talk to you more about that experience as it goes forward. And I think we will call it an evening. So all the best to everybody. God bless. Any questions, feel free to turn into one of my tutorial sessions or a next show. And all the best. Good luck in your trading. And all the best to you and your families. Thanks again, everybody. Thank you, Andre.
Okay, see you.
Have a good night, everyone, and God bless.